Boom. Marvell Earnings, really good Q4 fiscal 22. They beat on the top by about 1%. They beat on the bottom by about 3.5%. Huge revenue gains, right? Like 68%. And it's funny, the only semiconductor companies that are growing that big are NVIDIA and AMD on the top line. Big, big, big. EPS up 71%. So not only do they grow big time on revenue, they're carrying it all the way to the bottom line. So which markets are on fire? Well, first market is cloud, right? Up 113%. It's incredible the amount of penetration that Marvell has inside of these hyperscalers, right? Particularly for networking, and that's not only for copper, but also fiber based on and photoelectronic based on their big acquisitions they made. And this is an area that, quite frankly, a lot of companies struggle. And they're taking, there's no doubt in my mind they're taking share from Broadcom, possibly taking share away from Intel in this market. I haven't done that deep down analysis. Not only was cloud on fire, enterprise was up 64%. And as we saw with Cisco earnings, Dell Tech, and HPE, enterprise is on fire too. Now, what those three companies also said is that backlogs are a huge issue. But it doesn't look like it's as huge an issue for Marvell, given that they grew 64%. And little old 5G, 45% growth. Isn't that funny? When 45% growth is kind of a tack on. I'll also point out that in 5 years that Matt and the new team have been in there, they used to be 5 years ago, they were about 85% consumer and 15% infra. Now that is completely changed. They're 86% infrastructure, 14% consumer. And in my long history and me being old, Daniel, I've never seen a bigger transition of any company that I've seen from Marvell and do it successfully. Listen, I've seen a lot of companies do this and pancake on themselves because it's just way too much change. So I guess this is just another way of saying, hats off to the Matt Murphy team. So net the company is winning and growing markets, and that's a good place to be.
Yeah, great job by Marvell. Very impressive. The data center business was off the charts, 113%. Enterprise networking also red hot. But yeah, across the board, the pivot from consumer to data infrastructure enterprise has been palpable, impressive. The company is well ran. They're in the right markets. They've changed the way they report and segmentation to better help. I said last quarter in my Market Watch op-ed, they're no longer an also ran in semis. They are a player. They're a player to watch. Their growth and their entry into the right markets, their leadership, their partnerships, they're doing the right things. Hard not to like the company. Just making new partnerships with Dell just this past week in Open RAN. I mean, they're just getting in all the right spots and all the right spaces. And if you spend any time with Matt, with Chris Koopmans, the president of the company, it's hard to not like them. They move fast like a startup, but they're a really big firm, and that's something to be impressed by. Also, their acquisition strategy has been very sound, making good buys. Companies like Innovium, good buys in the right spaces at the right time. And by the way, this is the company that really minted the DPU, despite the fact that they don't necessarily get credit for it. They have been extraordinarily out in front, innovating, doing important work. And I think the recognition is coming through the revenue growth, the sales, and then, of course, the appreciation of the stock price.